Did you know that the average return on investment in the stock market has been about 10% annually for the last century? Quite startling, isn't it? But that's the power of informed and strategic investing in today's economy. With the right approach, you can potentially reap high returns that can significantly enhance your financial standing. We live in an era characterized by rapid technological advancements, globalization, and evolving consumer habits, all of which create a dynamic and potentially lucrative investment landscape. From budding industries such as green technology and artificial intelligence to established sectors like real estate and healthcare, the opportunities for investment are vast and varied. But here's the catch. Navigating this complex investment terrain requires knowledge, strategy, and a set of guiding principles. That's why we're here today. Ready to dive into the world of investing? Here are 5 rules that can help you prosper. Rule number 1. Never put all your eggs in one basket. This timeless adage holds true in the world of investing as well. This is where the concept of diversification comes into play. Diversification is all about spreading your investments across a variety of assets, sectors, and regions. It's like creating a financial smorgasbord, where you're not overly dependent on any single investment. Why is this important? Well, consider the story of an investor who put all their money into the tech sector, believing it was a surefire bet. But when the dot-com bubble burst, they were left with nothing. Had they diversified their portfolio, they would have been protected against such a significant loss. Diversification doesn't guarantee profits, but it's a defensive play that can help protect your wealth. It's like wearing a seatbelt while driving. You might still face bumps on the road, but you're better equipped to handle them. By diversifying, you spread the risk and increase the potential for returns. Rule number 2. Knowledge is power. Let's dive right into that. Investing is not a game of chance. It is a game of skill and knowledge. To make informed decisions, you need to do your homework. This means understanding the company you're investing in, its business model, and its growth prospects. Don't just stop at the company. Look at the industry trends. Is the sector growing or contracting? What are the key drivers of this growth or contraction? Understanding these factors will help you make a sound investment decision. And let's not forget about financial performance. Look into the company's profits, revenues, and debt levels. These numbers can paint a pretty clear picture of a company's health and potential for growth. Remember, the more information you have, the better your decision-making. So, delve deep, be curious, and never stop learning. Because in the world of investing, an informed investor is a successful investor. Rule number 3. Patience pays off. Let's think about this for a second. It's the classic tale of the tortoise and the hare, but in the realm of finance. Long-term investing, quite simply, is the tortoise's strategy. Consider the story of an investor named Sam. Sam began investing in his 30s, putting a modest amount into a few well-researched companies. While his friends were busy trying to score big with short-term trades, Sam stayed the course. He weathered market downturns and held on to his investments, not swayed by temporary lows. Fast forward a few decades. Sam's investments have grown significantly. His patience has rewarded him with a comfortable retirement fund, while his friends who chased quick wins are left with inconsistent results. The moral of the story? The benefits of long-term investing are clear. It allows for compounding, reduces the impact of short-term volatility, and leads to more predictable outcomes. Remember, investing is not a get-rich-quick scheme. Rule number 4. Know your limits. Risk tolerance is like your financial fingerprint, unique to you and pivotal to your investment decisions. It's the degree of uncertainty or potential financial loss you are willing to handle while making an investment. Let's break it down with a comparison. Imagine 2 investors. One is conservative, preferring secure investments that grow slowly but surely like bonds. The other is a risk taker, energized by the thrill of high-risk, high-reward investments like stocks. The conservative investor's risk tolerance is low, while the risk taker's is high. Both are valid strategies depending on the individual's financial goals, age, income, and personal comfort with risk. But why does it matter? Well, if you overestimate your risk tolerance and invest too aggressively, you could panic and sell at a loss when the market dips. On the other hand, if you underestimate it, you might miss out on potential gains. Understanding your risk tolerance helps you make investment decisions you can stick with, even in volatile markets. Rule number 5. Keep your eyes on the prize. Just like a captain periodically checks his compass to ensure the ship is on the correct course, an investor needs to regularly review and adjust their investment portfolio. This isn't just about watching numbers go up and down, it's about understanding the trends, the market dynamics, and how these factors align with your investment goals. Let's consider the story of a savvy investor named Alex. Alex had a diverse portfolio, but he didn't just set it and forget it. Every quarter he would review his investments, weighing their performance against the overall market trends. If an investment was underperforming, he'd dig deeper, trying to understand why. If it was outperforming, he'd consider if this was sustainable or just a temporary peak. By periodically rebalancing his portfolio based on his findings, Alex was able to improve his returns significantly. Regular reviews allow you to adjust your strategy and stay on track toward your financial goals. These 5 rules are your roadmap to investing success. Let's do a quick recap. Diversification is your safety net, it's the key to balance. Research is your compass, leading you to informed decisions. Investing for the long term is your time machine, allowing your investments to grow and compound. Understanding your risk tolerance is your mirror, reflecting what you can handle emotionally and financially. And regularly reviewing your investments is your maintenance check, keeping your financial engine running smoothly. In the fluctuating landscape of today's economy, these rules are not just guidelines, but lifelines that can help you prosper. We encourage you to apply these rules, test them out in your own financial journey, and we'd love to hear about your experiences. Did these rules steer you towards success? Do you have any other rules to add to the list? Your stories and suggestions could be the beacon for other financial enthusiasts navigating the investment seas. Remember to like, subscribe, and share your investment stories in the comments. We can't wait to hear your success stories.